أول صفحة من أول صفحة. الساعة 2 مستعد صح؟ السلام عليكم، كيف الحال؟ Thank you for joining us. This is our investor engagement session for H1 2023. And before we start, I'd like to introduce the team here in Oman. We have Balakrishna, he's our group CFO. Majid Salhi, he's the board secretary and also a compliance officer. My name is Saeed Habsi, Oman Chlorine CEO. And we have on the other line is Mr. Fuad Al-Basha. He is the Union Chlorine CEO. And then we have also from Zoom, Dr. Abdullah Al-Mandhari. He is a board member and also a deputy audit committee chairman in Oman Chlorine. So we'll go through the presentation. Then at the end of the presentation, we'll open the floor for Q&A. So this is our agenda today. We'll have Oman Chlorine overview, then an updated on the major shareholders, Oman Chlorine product capacity. Then we'll talk about the subsidiaries in UAE and Qatar. Then we'll go through the financial performance for Oman Chlorine, then the parent company and the consolidations. Then we'll talk about future outlook. Then after that, if anyone have any question, then we'll open the floor for that. So Oman Chlorine, we established it in '97, our first chlor-alkali manufacturer with capacity of 100,000 metric ton of all our major products. We awarded His Majesty Sultan Qaboos Cup in 2007 and 2008. We did an expansion in 2021 for caustic soda plant. We increased the capacity by 60%. Then also we add a new calcium chloride unit with capacity of 80 metric ton a day. We have very good HSE track record. We produce chemicals that goes into oil and gas and also water treatment sector in Oman. Major shareholder that have 5% and above. We have Al Anwar investment with 22.01%. We have Bank Muscat Asset Management with 11.06. We have PASI 9.39. We have OHI, Oman International Oil and Energy Services 9.19. Then we have the Civil Service Employment Pension Fund with 8.8%. Then Al Ikhtiyar Trading and Constructing LLC 5.16. Then Mr. Abdullah bin Nasr Al-Amri 5%. What we produce a hydrochloric acid. Our capacity is 66,500 metric ton yearly. Caustic soda, 50,000 metric ton. Then we have a capacity to convert the liquid into the solid, which we call it caustic soda flakes, with capacity of 7,200 metric ton a year. Then we have sodium hypochlorite, 12,000 metric ton. Then calcium chloride, 94%. With the expansion, our capacity is 50,400 metric ton. So we have a capacity to convert our hydrochloric acid to calcium chloride, and we increase our capacity from 12,000. With additional unit, we have a capacity to go up to 50,400 metric ton a day. So what we produce a hydrochloric acid that goes mainly into oil and gas, an application called well stimulation or acid treatment. Then we produce a calcium chloride, which is mainly used as a drilling salt. It goes in drilling operations. Sodium hypochlorite, it goes into water treatment. Caustic soda is used more than half of the chemistry application to create 100 of secondary components, such as a plastic, alumina, detergent. Those are the main application for caustic soda. We'll talk about subsidiaries. So in 2013, the company decided to expand outside Oman. So we built a plant in Abu Dhabi, in Musaffah area, with installed capacity of 70 metric ton a day. Again, we produce similar products. So we're producing caustic soda, hydrochloric acid, sodium hypochlorite, and also have a calcium chloride unit. And that entity under name of Union Chlorine. If you look into the shareholder structures in Union Chlorine, Oman Chlorine own almost 60%, 59.9%. Union Chlorine Holding Limited, it's on 15.1%. Then we have Horizon Energy on 25% of Union Chlorine. Gulf Chlorine, sorry, Gulf Chlorine is our entity in Qatar. Again, we built it during the same time in 2008. We started the project. The plant is located in Sa'id Industrial Area. We're producing exactly the same as Union Chlorine, caustic soda, sodium hypochlorite, calcium chloride, and Gulf Chlorine also is managed by Oman Chlorine. Shareholder structure, we own 51% and 49% owned by Al Marqab Capital. Then in Gulf Chlorine, we have another small plant that producing only calcium chloride, and the shareholder structure is 35% owned by Gulf Chlorine and 65% owned by KLJQ Qatar for organic material. So this unit mainly is to produce jointly calcium chloride product. Then you'll go to financial outlook, financial and future outlook, and I will give the mic to our group CFO to take you through the numbers.
This table shows the dividend which has been issued over the years, and the current market price of our share is around 0.542 as of 28th of August. The next slide is our historical performance. We are comparing from 2019 to 2023 H1. So the 2019 to 2022 are all annualized figures, whereas H1 is 6 months figure. We have posted 6.4 million riyals worth of revenue with a net profit of 1 million riyal for the parent company. Historical trend for the consolidated level, we have made 16.1 million riyal as against 30, that is for 6 months figure, as against 31 million last year. The consolidated profit after tax stands at 1.6 million riyals. This chart shows the comparison between the respective 6 months figures of 2021, 2022 and 2023. The company posted in 2023 6.4 million riyals of sales in parent company as against 6.6 million riyals of last year, and we posted a profit of 1.086 million riyals as against 1.5 million riyals of last year. Revenue and EBITDA of the parent company decreased by 4% and by 19% respectively, while profit after tax was down by 31%. The company has been able to maintain the capacity utilization above 100%. The existing plant achieved over 94.86%, and the brownfield expansion was operating at 102.96% during the year H1 2023. The main impact in the profit is due to the profitability reduction is due to the global caustic prices dropping, which has impacted the profitability of the company. While we have been able to maintain the sales by having increased volume in traded goods and increased capacity. Performance for the group, we achieved 16.1 million riyals worth of sales as against 15.4 million riyals sales of last year. The net profit for the first 6 months is 1.4 million riyals as against 1.7 million riyals. The trend, as you can see, has been is improving on the group level. So as compared to last year, the group revenue increased by 4.5%, EBITDA is increased by 8.06%, and PAT reduced by 19.9%. Improved operating level has increased its sales of the company. International price of caustic has dropped, which has led to lowering of margins.
Continue.
A future outlook, the expansion in Oman has led to cost optimization, which will enable the parent company to cater for local demand and compete effectively with imports in the local market, and also to offer better price to export customers. The future outlook for UAE subsidiary is highly promising, supported by the existing supply agreements with major oil and gas companies and strong direct end user sales. The proactive management's ongoing commitment to cost-cutting measures, along with recent achievements in getting lower gas tariff and also lowest electricity tariff and improved in-country value score, positions the company for even better success moving forward. The Qatar subsidiary expects to have a stable outlook in terms of production, revenue growth, EBITDA, bottom line for the coming years. Management outlook for the projected selling prices in 2023 remains to stable at the similar levels what we are seeing now, and which is expected to generate stable returns. Disclaimers.
So this was the end of the presentations. We'll open the floor for Q&A.
Hi, I'm Praveen from OHI Group. Can you hear me?
Yes, Parveen.
Great.
From which?
OHI Group. OHI, Oman Holding International Group.
OHI, yes, Mr. Parveen.
Thank you. Yeah, thanks for the presentation. It's short and sweet and encouraging to see the last year and this year has been good for Oman Chlorine, with the production near 100% and at sometimes better than 100% and had a record profit of last year. When I look into this H1 performance now, I could see at the Oman discrete level what you just mentioned, it's about 33% less, whereas at the group level it's 20% less, which means the subsidiaries are doing better than what the holding company at Oman Chlorine we are doing about it. Operating on the same international market, can we have some more flavor why the profit drop is more acute in holding company than in its subsidiaries? And second clarity was that considering the current trend, does the management see that year-end is going to be better than what it was last year?
Thank you, Parveen. I'll start with your first question. First of all, last year the capacity utilization for subsidiary was less compared to this year. That's why you see the performance of, if you compare to Oman Chlorine, is better, because this year their capacity utilization is better compared to last year.
Thank you.
Especially in Qatar. Number of shutdown in Qatar in 2022 was less. Their capacity utilization, I think, was less than 80%. Yes. But this year they are above 100%. That's why you see the difference between us and subsidiaries. To answer your second question regarding the outlook, yes, there's a slightly increase on the price of the flakes globally, and we start seeing shortage on, not shortage, demand, more demand on compared to availability of supply. So hopefully for H2, the price will be better than H1.
Great, thanks. Thanks for both the questions.
Thank you. Yes, go ahead, Mr.
Bishan.
Bishan?
Hello.
Yes.
Hi, good afternoon, gentlemen. This is Bishan Bhalla from Vision Capital.
From?
You mentioned from Vision Capital.
Vision Capital, yes. Can you speak loudly and slowly, because your voice is not that clear?
Can you hear me better now?
Yes.
Okay. You mentioned in the presentation that the drop in caustic prices as well as the increase in acid prices and the related products were two sort of, you spoke about two products. And you also mentioned that unlike previous times, the company has a wide range of applications. So you don't expect the overall realization to sort of dip drastically. Is that stance the same given what you've seen over the last 6 months when it comes to sort of realization prices for the group as a whole? If you could just give us some clarity on that.
Okay, I'll go back to what I said. The impact mainly into three things. And one major impact for subsidiaries is the interest rate. If you take historically for the last year, say 12 months, the interest rate move crazy from 3.75 LIBOR to
0.25 to 5%.
to 5%. That's really impact us heavily in terms of profitabilities, mainly due to the LIBOR change. Regarding the price, we didn't see much drop on the local market. The biggest challenge was on the export, mainly on the caustic soda.
Okay.
So apart from the caustic soda, the rest of the product, the price either on the increase little bit or stay flat. And this is applying in Oman, UAE, and in Qatar. But the caustic soda globally, or the index, is dropped by 30–40%.
And how soon or sort of what is the outlook on those prices? So what sort of rebound do you see from a 40% or a 30% drop in caustic soda?
Yeah, based on the last index report, it showed that this start recovering. But how long it will take us to recover 100%? We don't know. But still, the price, if you take price of caustic soda today, is better than the price of caustic soda in 2022.
Okay. And in terms of sort of diversification of revenue or alternate sources of revenue, if you could just give us some comments on the same.
So as I say, we're producing 4 chemicals. Those chemicals goes in different applications. For example, hydrochloric acid, as I say, either you are sell it as a raw acid that goes into oil and gas, mainly for enhanced oil recovery, frac acid or stimulation. And if you don't have a market for it, you can convert it to calcium chloride in order for you to produce a drilling salt. That is on the first chemical. On the second chemical, which is caustic soda, it has more than 2,000 applications. So there's no issues on that. It goes into alumina refinery, ammonia refinery, oil refinery, paper, detergent. So selling of caustic, there is no issues. In terms of sodium hypo, actually the production is not that big. It's around 12,000 metric ton, and it goes in water treatment and detergent applications. Again, Mr. Bishan, we are very specific on what we do. We're producing only 4 chemicals, and it goes in very specific applications.
Noted. You know, if I look historically, and I know the company has evolved from the last 5–7 years, but if I look at sort of your margins, you know, back in 2017 or prior to that, you know, if you could just give us some comments on sort of those margins of let's say the mid 40s or even in some cases northwards of 50%, and sort of, you know, net margins of 20–25%. Now, what are your thoughts on sort of those, or what do you think is sustainable margin for the company once the finance cost or the interest cost sort of reverse back to a normal trend? What kind of margins can this company generate going forward?
Okay, let me answer this. You just mentioned if you want to compare it before 2017, you are aware that in 2017 there was a electrical tariff increased across GCC. So basically, if you take an example in Oman, we was paying 12 beza per kilowatt for the 8 months and 24 beza for 4 months. So we have winter summer tariff. And as you're aware that chlor-alkali standard globally, 70% of the variable cost is power. So after 2016, the tariff is changed. Now we are under CRT. And the tariff went almost by double. So now you have generation charge, transmission, and distribution. And if you take the average, it's around 28 beta per kilowatt. That's the average, estimated average cost per kilowatt yearly. If you take the average CRT, is around 28. Compared to 16, that was the tariff in 2000, before 2017. In terms of margin, one of the components is the interest rate. Interest rate is fluctuating, so I cannot give you a margin because that's for the last 1 year, every 2 months, 3 months, the interest rate is changed because of LIBOR.
Or okay, I get that. I get that on a net basis, it would be difficult to sort of comment on margins, but let's say on an operating basis, what would be sustainable, or is that also difficult to comment on?
Mr. Bishan, the margins is mainly due to the pricing. If you're talking about the group level, our Qatar as well as UAE operations export caustic soda flakes. The cost remain constant. Once the factory is set, the cost remains constant. Because the price fluctuation in the export market, the margins are also varying. Am I clear, Bishan?
Yeah, sure. Okay. I'm okay with that. Yeah, sure. Okay. Yeah, that's it from my side right now. I'll just go back in queue and come back if there's something later on. Thank you, gentlemen, and wish you all the best.
Thank you.
Mr. Abbas.
Good afternoon, gentlemen. Thank you very much for this call. My name is Abbas Muslimi. I work with Vision Capital as a portfolio manager. We had a very interesting call with you in September last year, where we sort of took us through your business, and you gave a guidance in terms of you're going to try and achieve 100% utilization across the 3 plants. You're doing that. And at the same point, you also mentioned that, you're as it's a commodities business. And, even though there's a large chunk of your contracts, local markets that tend to be long-term, but at some point, the export markets is where the variability comes in. And we've seen that, there's a YOY drop in the operating performance of the company. And that's despite you guys working at close to 100% utilization across plants. I was just going through your notes in the second quarter. In the second quarter, the Oman plant, I was just wondering, the capacity utilization was, I think, close to 98% compared to what you've been working in. So there's absolutely no issues in any of the plants, right? In terms of volume, in terms of the way the plants are operating, everything's according to plan. That's my first question. And secondly, is it just a function of the pricing on the international markets as per the benchmark that's actually led to the decline in profitability? I'll come to the financing costs in my next question. On an operating level, this is my understanding, right? That caustic soda prices are under pressure, and that's sort of flowed into your operating performance decline. On the utilization side, is there any sort of downside in the Oman market, in the Omani plant?
No, everything is running smooth. And if you look into the top line, I think we are now catching up with last year numbers in terms of top line. So there is no issue, any issues on the utilizations, and that's also reflecting into our top line numbers.
Yeah,
got it.
The volumes, yes, we have sold more, yes.
Okay, so that's comforting. Now, when it comes to, because obviously the company had to go through a cycle, and now that all your plants are working at 100% utilization, that's the part that you've taken care of. Now, operation is the operation, and you've already said that there are some good signs of caustic soda prices bouncing back. But I mean, there's little you can do about it. These are global benchmarks, I understand, and you'll have to wait and see how these prices evolve in the near term. Now, on the financing side, I'm talking about the interest rate reset. When I see your latest numbers and the first half and the second quarter numbers of this year and I compare it to last year, has the increase in interest costs entirely been passed on? Like whatever I'm seeing in the numbers, that's your current interest cost, right? On this 50 million odd riyal of consolidated debt that you're carrying, the latest interest cost is what I see in the QA, in the income statement, right? There's no further increase that you expect from here. That's my first question on the debt side.
Abbas, let's take question one by one because you're talking faster. So the first question
Yes,
is on the interest rate, huh?
Right.
Okay, interest rate, we don't have a control for this. So based on the LIBOR, the interest will goes. But as far as till today, the interest rate in some of the subsidiaries increased from 3.7
Yeah, 4% to almost 8%.
to almost 8%.
Okay, now when I look at now, if 8% is your current interest rate that you're carrying on this 50 million real sort of debt that you have outstanding, you're looking at a 4 million. You're looking
Just for the sake of clarity, this is one of the subsidiaries we're paying 8% interest rate, more than 8%,
right,
and the other
right,
one 6.75.
correct.
And
Now,
there's around between 3 to 4% increase on the interest rate.
sure, I can see that in the finance cost. I think your annual outflow is going to be around 3.9 to 4 million real in interest expense on the group level. This is what I'm seeing. So my question is there any sort of conversation to try and fix these rates and at the same time try and, because I see some of the other Omani companies borrowing at 6.5%, companies that I follow. Now, in your case, you have operations across 3 countries, so it's not fair to compare you to them. But is there is there any conversation that you're talking to your bankers to, one, look at a fixed rate loan, and secondly, try and sort of have an average rate of 6.5-7%, which is what I see other industrial companies carrying their loans at?
Yes, we are talking to all our partner, all the bankers, in order to come up with win-win interest rate. But again, this is like global. It's not only for us. It's for everyone.
And when do you expect any news to sort of come in on if there's a, like some sort of a restructuring of the loan or any sort of changes or interest rate? Is that something that's going to close in this quarter, or you think it's going to take longer than that?
Well, no, we're trying with them. We don't know how it goes, because at the end of the day, any restructure, if we try to do any restructure, then it costs you money. You understand? So we are talking
Right,
to.
of course.
Once we have something, then we'll let you know. But
Yeah, because
we have like ongoing discussion in Oman, ongoing discussion in UAE, and ongoing discussion in Qatar.
You know why I bring this up is because I'm trying to look at your cash flows, right? So if I just move beyond your income statement, if I look at your cash flows, you have a depreciation expense of close to 4 million real a year. Against that, you have an interest cost of close to 4 million real a year. So depreciation will set off the interest cost. But you also have a principal repayment of 4 to 5 million real. Last we were talking about, you were saying that on an annual basis, you expect to pay down 5 million real principal. Now, if I look at your profitability profile for this year, looks like you will not be left with any money to distribute to shareholders, just the way the business is evolving. So that's the reason I'm focused very much on cash flows, to understand that if the debt is not refinanced, and if I look at the repayment schedule, looks like there'll not be any money left to sort of, as dividends for shareholders, because your cash flows will be eaten up by your debt and interest repayments. Am I making sense? Is that the case, or you're looking at a different scenario and I'm missing out something?
Mr. Abbas, with respect to that, the debt has been comfortably rescheduled in Qatar as well as in Oman. There's no problem in Oman. In UAE also, the debt has been structured in such a way that we don't anticipate any repayment issues with the banks. And we'll be left with.
What's your annual repayment schedule, sir? How much are you expected to pay down debt on an annual basis?
If you go to the balance sheet, you can see the current portion of liability, term loan. You can see the next.
Yes, I'm seeing both of that. Okay, I'm just trying to understand. Like, I'm trying to make an estimate of your cash flows that will be left over after meeting your debt and interest expenses for the year. So for me, for that, to understand that, because you're constantly talking to bankers, I'm trying to understand what your latest debt reschedule repayment schedule is. How much are you expected to pay annually for the next 2 to 3 years in debt repayment?
For next 1 year, we have around 3.5 million reals.
Okay, so on an annual basis, you're expected to pay 3.5 to 4 million real on the debt terms, right?
Correct.
Yeah. Okay, and then the interest is another 4 million real, 3.9 to 4 million real on the interest expense. So because because I'm just trying to build your cash flows to understand what the company will be left over. So it looks pretty, it's something that we'll have to watch very carefully, right? From a minority investor's point of view, just to see, what happens. I mean, I understand it's a commodity-driven business, and from your perspective, keeping these plants available 100%, you guys are doing an exceptional job, and there are a few things that are outside your control. But I was just trying to understand from the debt point of view, if there's any sort of conversation on the restructuring happening where you can increase the tenor or, find ways to sort of make sure that like Mr. Hapsi mentioned, that it's a win-win where you make, the shareholders also get some money left over after meeting your debt obligation. So my focus was on that.
So what was your question, Mr. Abbas?
Yeah, Mr.
No,
I think, Mr. Abbas, you just want to ask very straightforward question. Are you going to pay dividends? Yes or no?
No, I was trying to understand, will you have money?
Question, but you took a long route. So, you need to remember, apart from the cash flow, you need to look how much cash we have today.
Right.
You understand? So
yes.
Regarding pay dividends or not, it goes back to the shareholders.
Correct. And you have healthy retained earnings.
Also, you forget to look into the Oman Chlorine Gearing, Gulf Chlorine, Union Chlorine. The debt equity ratios. In terms of banking, to answer again your questions, yes, we are talking to all our banks. The bank understand the situation. The effects of LIBOR is not only for us; it's across all companies, all the companies. And we think that by end of the year we'll have something with our banks.
Thank you. Thank you very much for for answering my question in a straightforward manner.
If you remember, Mr. Abbas, last year you asked me the same question. Then the board of director and the shareholder decide to pay 25 beza plus 5 bonus shares.
Yes, absolutely. I have one last question on the competitive landscape. Last we spoke again in September, you had said that there was a plant coming up in Oman. Any news on that, when that's going to be up and running? There's a competitive plant coming up in Oman, a chlor-alkali plant, I believe.
Coming up, I said in soon. We, based on the info, they'll be starting next year. We don't know either Q2 or Q3. But as I said, we'll focus on what we do.
Yes.
And we focus on our client to improve our service delivery and quality of our product. And as I say, competition is always there. It's not only from Oman. We have competition, and we have different material that coming up from imported to Oman.
Understood. Okay. Thank you for that. Anyway, that's it from my side. Thank you for this opportunity, and all the very best to you. And I hope things continue to improve for the company. Thank you.
Thank you very much, Mr. Abbas.
Thank you.
Any questions? خلاص ما conclude. نعم. خلاص. ما عباس والثاني.
Any question, please?
دقيقتين و conclude. خلاص. Okay, thank you very much.
سلام شباب.
شكرا فؤاد. شكرا دكتور عبد الله.
Thank you very much.
دكتور عبد الله.
شكرا الله يحفظكم، ما قصرتوا، جزاكم الله خير.
شكرا.
نلتقي على خير.
حياك.